What's going on, guys? Can you hear me? Let me know. Let me know if you can hear me, guys. Yo, what is going on, guys? Bright and early, man. All right. We killed gold overnight. That was amazing. Up 900 per contract on gold. Let me actually just send this out. What is going on, guys?
Viciously.
All right, welcome back, everybody. Rick Santelli is standing by with the data that we've been waiting for. It's PPI that people are waiting to see, the last inflation number before next week with the Fed. Rick, take it away.
Absolutely. Let's start out with PPI, then we'll go to retail sales. February PPI headline number expected to be up 0.3%. Zoom, 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 up double. Up 0.6%. That would be the hottest going back to, well, equals July of last year. To find a higher number, you're going back to June of 22 when it was up 0.9%. You strip out you strip out food and energy, it's up 0.3, 1/10 hotter. But in the rearview mirror, we had up 0.5%. You strip out food, energy, and trade, it's up 0.4. It's up 0.4. That would be the hottest, obviously, since it was up 0.6 last month, year over year now. Okay, these are final demand headline numbers. Expected to be up 1.2, up 1.6, up 1.6 on year over year, and that is, wow, we're going to have to go back a ways. 1.6 would be the highest level going back to September of last year when it was 1.8. Now, the year over year, ex food and energy, up 2%, equaling the rear view mirror, but definitely a bit hotter than we were expecting. So ex food, energy, and trade year over year, up 2.8. That follows up 2.6 to find a higher number than 2.8. You're going to have to go back to September of last year when it was 2.9. All these are warmer. Yields are going up. Now, let's switch gears, shall we? Let's go to retail sales. And remember, every one of these metrics was the weakest since March of 23 in terms of month-over-month change. So now, are we going to reverse it? We certainly did. Up 0.6. However, that's still less than we were looking for. And that 0.8 that was the worst since March of last year now becomes minus 1.1. And if you strip out autos, it improves. It does not improve. And this really is interesting because when you strip out autos and it doesn't improve, that really gives us some sense of what's going on in many of the other industries. It's up 0.3, 2/10 shy of expectations. And last month's worst since March of 23 becomes worse again from minus 0.6 to minus 0.8. Strip out autos and gas up 0.3. Finally, this is our first number that equals expectations. Following down 0.5, 0.5%, that now becomes down 0.8. And finally, if we look at the control group, it's unchanged. We're expecting up 0.4. Last month, minus 0.4 becomes minus 0.3. The only thing we have left is initial and continuing claims. And I just dropped the papers. Hold on. Let's bend down. Let's grab them. Here we are. We're back in frame. Initial claims, 209,000. 209,000 would be the smallest since Feb of 24, which, of course, is this year, not that long ago. And if we look at continuing claims, this is a biggie. 1,811,000. We really need to pay attention to this number. That's really an outlier, especially considering we're looking for our second number in a row to be up over 1.9 million as it was last week. And that was the highest since the third week of 23 in November. Now, here's what's fascinating. Not only is this significantly lower, there's a revision of last month that's unbelievably large, from 1,906,000 to 1,794,000. Huge revision. How far back do we have to go to see 1,794,000? That's going back to October of last year. So these numbers are really a bit odd. On the claims side, that's showing a labor market that's super tight, but I question continuing claims accuracy. On retail sales, well, a bit of a disappointment on many levels, especially on the revisions. And on PPI, you know, I want the experts to weigh in, and I hope they're not going to sound like CPI, where they're just going to push this back a bit. Hotter than expected, no matter how you slice it. We're now up to 421.5, 422 in tens. Tens prior to the number, we're at 420. But keep in mind, we were flirting with 406, 407, 408 not that long ago on an intraday trading basis. And the pre-opening equities, they're still dealing with this in a positive fashion, which is very interesting, considering the numbers. I'm sorry, there's a lot there. Becky,
that's what I was going to ask you about, Rick, is I'm surprised. Look, we were looking at the Dow futures up 165. As soon as the hotter than expected PPI came out, you saw that drop down to 120 or something. It's picked back up. This seems like a shockingly, surprisingly positive reaction from the equities front. Yields aren't that much hotter. Watching what happened afterwards, are you surprised by any of that?
Yeah, I'm very, very, very surprised about what's going on in equities. I can't wait to see how the panel weighs in. And it's a very similar dynamic to CPI the day before yesterday. It seems as though investors are kind of brain melding with the Fed, and they continue to see easing in 2024. We could question what meeting. Is it going to be June? Is it going to be July? Is it going to be September? But they're still zeroed in on the Fed moving, and they don't look at PPI as intensely as CPI. So I don't think the reaction should be that surprising, but it continues to amaze me that equities are so convinced that the rate of inflation is not going to be a huge mogul for some of these Fed eases, especially off all these articles. I'm sure everybody read the Wall Street Journal article today. Yeah. People are a bit freaked out. They want deflation. They want prices to actually go down instead of going up slower. And believe me, the Fed, the last thing they want is deflation. The last thing a country with $34 trillion in debt wants is deflation.
Great. Rick, stay with us. We're going to talk a lot more about this data. For that, we want to bring in our panel, Veronique Darouji, who is Political Economy Chair and Senior Research Fellow at George Mason University's Mercatus Center, Rakeen Mahbood, who is Groundwork Collaborative Chief Economist and Managing Director, and, of course, our own Steve Leisman. And, Steve, why don't we start with you? You take us through the things that really jumped out to you.
Well, the first thing that's got to jump out at you is the reversal inside the PPI of what's driving it. This time it was goods, which have been experiencing deflation over the past several months, up 1.2%, while services were pretty well tamed, which is kind of one of the things the Fed is looking for, up 0.3%. Energy obviously driving some of that, up 4.4%. Take out food and energy, up 0.3%. And the trade services, this is the measure for profit margins, also declining 0.3%. I will say this. I think we're paying more and more attention to the PPI because what that's going to do is to feed into the PCE, CPI, which is coming out at the end of the month. And so that's really the key to it. And I think I'm a little less surprised than Rick about the market reaction. Guys, I don't know if you have the January 2025 Fed contract. What that shows is the market has been banking this year on less and less easing. So that's going to come down to your right, or sorry, it's going to come up to your right here in terms of the year-end Fed funds contract. But then you look at where the market has been and the stocks have been since January, they've been going up as well. So there's been this disconnect between the stock market and the outlook for the Fed. They were married at the hip all of last year, and now the market seems okay. I think I do see, though, a pretty decent rebound in the February retail sales number. That was a big revision we have to take into account. It's probably, on net, going to bring down expectations for GDP this quarter. It was a 1.1% decline from what had been originally on retail a 0.8% decline, and it came in below expectations. So I think we have a little less consumer, but still you did have a rebound in February from what was thought to be weather-related and other issues in January. So that's okay. I'm okay with that. Not okay with the PPI. I think there's still going to be some concern about inflation, but whether the market's concerned about it, claims were good, right? 209, and they did a step down in the continuing.
Do you think continuing claims, that revision, these numbers are really, really distorted based on history, expectations, past revisions? Any thoughts?
Right. I mean, well, they're lower, and look, Rick, maybe I have a little more tolerance for you than you with the foibles of the government trying to measure the economy. It's just, you want to know what happened in the
106% debt to GDP. I'm sure we'll be happy with the quality of these numbers as well.
Hey, guys, let me just bring in our other guests as well. Veronique.
I want to just do one more thing, Becky. I just want to say one more thing, which is that kind of unchanged on the outlook for the Fed here. The June Fed funds contract I have at a 65% probability. We went into this at 67%. So it's come down, but not a whole lot.
Veronique, when you look at this, the PPI number in particular, does that tell you that the Fed is going to have a harder time cutting rates? Do you think it pushes off that date even further?
Yeah, absolutely. And in fact, I was always surprised that anyone believed that we had achieved soft landing and that they were going to be rate cuts. I mean, we've had the CPI above 3% for the past 6 months and showing continued strength in both January and February. The PPI kind of the same. And I mean, it's just that cannot be dismissed any longer as noise or transitory.
All right, guys. So as you guys know, CPI came in hotter than expected a few days ago. It was on Monday. PPI came in much hotter than expected at double today. You know, even when you strip out certain, I guess, volatile metrics. So interesting to see how the market is going to react to this. Obviously, we all know that the initial move is not always the lasting move. Remember, with CPI, we had a super green market, then it went red, then it went back to super green. So, you know, we cannot take these moves here. We're about, let's say, we're almost 50 minutes away from market open. So, you know, the moves that happen here this is a lot of profit taking, a lot of, you know, what we call seek and destroy, taking liquidity on both sides, right? I was in a gold short up 1,400 per contract. And right now this thing is going really volatile, still up around 1,000 per contract here. But by the way, if you guys are in that gold short, take profits if you wish. I think there is a multi-day short here on gold. And I've mentioned this before. Let me just do that. But this is the 2020 trend line here. Gold's, you know, seems to stick to these trend lines quite often. And not only do we have that trend line, but we also had a break of structure on the 4-hour and then a retracement into this 4-hour fair value gap. So what I'm wanting to see from gold is a potential continuation, but it's been strong all month, right? But I want to see a potential continuation here on gold. I will likely be opening up multiple shorts over the course of this month because I think that it will be volatile and data dependent. as interest rates and the dollar try to normalize around this data. But can you explain why deflation is bad for debt? It's not necessarily. I mean, I think it depends on when deflation comes and what the rate of deflation is. Do stocks rally if PPI is hot? It's not that cut and dry, brain busters. You are going to, during news, you're going to have these ebbs and flows where, you're going to have sell side liquidity taken, buy side liquidity taken, etc. So, it's not that it's not going. This one metric is not going to tell us whether stocks rally for the next, coming weeks or whatever. And today is going to be really volatile, just like CPI. So it's not that cut and dry. You have to take the whole picture into account. Plus, you have to, combine it with what is your outlook. Oh, this might be a nice short here. Could we take a trade this early? You have an order block inside a fair value gap. This could be a nice trade here. Your stop would have to be hella wide. It will go up to 18,200. What, NASDAQ? NQ's at 18,000, almost 18,400. From a high time frame, if you look on the daily, my thesis was always that for the last week, my thesis was that NASDAQ would push up into these imbalances here, right? And, we did rally quite a bit on CPI day towards the end of the day, and then push up into these imbalances and then come down here and take out these relative equal lows potentially in this volume imbalance. So that is still my thesis. But if you just take a look at it, like this right here is just all consolidation, right? So this is why I was saying in my video that, the market seems to be now basing finally at the top. And for me, it's a profit-taking moment for any short-term or midterm swings, right? Like I'm not going to liquidate my IRA or whatever, but if there are certain things that you bought recently and they've rallied a lot, for me at least, this is right around take profit time, or at least rotation time for sure. Because of this, but my thesis is that over the coming week that we come down here and take out these lows and potentially into this volume imbalance. ES is not as clear as NQ. Now VIX, as I said before, this is something that I'm interested in using the hedge, and I've mentioned this maybe twice in February, and I said that when we come into these imbalances here on the VIX and we're near 13, right, these volume imbalances, and we're near 13, it's a good way to hedge. And I've said this time and time again, and a lot of people have made money with that suggestion, that for me, I would much rather, because everyone's asking, can I short? Should I short? Should I short? Everyone wants to short, and that's one of the dumbest things you can do, in my opinion, if we're talking about the S&P 500. Like, if you bought SPY puts or something up here, I mean, you're still bleeding, even when the market is stagnant. But for me, the hedge is VIX, because I think that right now we are in such sensitive territory as it relates to rates and the dollar and data, and obviously, pre-recessionary markers, that any sort of little bad news, you tend to get a spike in the VIX, even when there isn't that much movement in the indices. So we had a spike in the VIX. Like the market was down on this day here, this like 20% day in the VIX. The market was down 1.5%, and the VIX spiked 20%, right? And then we had the same thing again in the first week of March. The market was barely down, and the VIX spiked over the course of, 4 or 5 days. The VIX spiked like another 20%. So for me, if you're shorting the market here, you're still playing in dangerous territory, and I think it's kind of, for me, it's kind of dumb to try to short the market here when there's clearly a propensity to keep stocks and AI stocks inflated. It's not the right time to short, in my opinion. You want to wait for a break of structure, right? So if you look at the S&P 500, there's not even a break of structure, even on like lower time frames, right? Let alone the daily or the 4 hour. It's not like gold where, we did break structure. And that's why I shorted it last night. That's why I shorted gold last night, because we did actually break structure and then retraced up, and then we shorted it from here. Made $1,400 per contract on that short, right? But this is the type of thing that you want to see on the indices, is you want to see a break of structure, and we just haven't had that. So if the NASDAQ can get below this, for instance, if it does something like this, I'm going to be an artiste for a second. But if the NASDAQ does something like this and closes below this and then retraces, yes, now you can contemplate a short. But motherfuckers are just sitting here throwing their money away, buying puts all the way up. There are some influential people who have been doing this, leading their followers to slaughter. And I just think it's really, really dumb, right? Thank God we're equipped with the skill of day trading where I don't have to do something crazy. What did I tell you guys? This was the short right here. Oh, yeah. That would have been so beautiful. That's all right. That's all right. Because I'm short gold. Up 11, almost $1,200 on the day. I'm going to hold this. Last time I shorted gold, I made $13,000 per contract. Over multiple days, obviously. Over multiple days, not over one day. But thank God, we're equipped with the skill of day trading. That way I don't have to sit here and be like, I think it's puts time. I think it's time to buy puts. No, there's no thinking, right? It all has to be deliberate, and it has to be technical, and it has to come with a major, major thesis. Yeah, this was NQ right here. Did you catch this NQ, Alex? This was the play right here. Unfortunately, when I spotted it, it was like right here. So for me, I couldn't enter. Oh my God, gold is going crazy. We caught the epic short. If this thing drops, guys, if gold rolls over, woo, that'll be a 5-figure play on gold, bro. Penny says I got in too early. On what? NASDAQ? Yeah, I think right here, when the market opens, I'll likely buy VIX at the money calls expiring in May. It's not going to be a day trade. You're trading from the airport, Alex? Good luck, bro. And safe travels. UVixy is what I use for VIX. It's not the same thing, honestly. You're much better off with the VIX. But to each their own. You're probably trading on Robinhood or Webull. Otherwise, you should be trading the VIX, not UVixy. SMB Capital. You're at SMB? Mike, you work at SMB? What's the best platform to trade futures? No VIX on Schwab. What? What do you mean there's no VIX on Schwab? You can log in to Thinkorswim with your Schwab account. What do you mean there's no VIX on Schwab? I caught that gold short. Hell yeah. All right. So let's check on the indices real quick. I want to see, there's going to be plenty of opportunity, guys. Yesterday, if you guys traded, it was a sleeper for sure. It was a sleeper for sure, and that's because we didn't have red folder news yesterday. I thought it would be kind of brutal, and we traded yesterday. If you guys traded, it was like one of the sleepiest days of the year, and we traded inside yesterday's range. What's crazy to me is I would think rates would have climbed a little bit more. I'm going to get back into ZN soon, especially if we hit this box here. I'm going to get back into ZN soon. This is the weekly fair value gap. Made what, 1,100 per contract on the last ZM play, but rates are rallying with this bad news today. Double PPI. That's crazy. That's crazy. And we do have, when is the next Fed meeting? Hold on. Let's see if the Fed funds rate is unchanged. And I'm going to try to find another good trade for you guys. Oh, next week is the Fed meeting. March 20th. Okay. March 20th, which is a Wednesday. So 99% now that the Fed skips, which is not surprising. 93% that the Fed skips in May. And still 64%. This is crazy to me, guys. We had hotter than expected CPI, and this rallied. I mean, this the probability that the Fed cuts went up, and then we have hotter PPI, and the probability that the Fed cuts went up even more. This makes no sense. The market is doubling down that the Fed cuts in June. This is why there's sort of a battle up here. This is why there's sort of a battle up here with the indices. All right. I'm much more comfortable. That NQ short was, wow, almost 2.5 to 1. RTY definitely respecting the news more than the other indices. Because if you look at NQ, every time it tanks, it creates these. Let me remove this. This trade is no longer valid. Every time it tanks, it creates these huge wicks at the bottom. Same as ES, right? But if you look at RTY, it's just dropping. RTY might be the one to short today, guys. Oh my God, gold. Please dump. I need 5 figures on gold. I need 5 figures on gold, guys. Oh yeah. If gold ignores this fair value gap here on the 4 hour, if gold just ignores this, it's going to be like fucking bungee jumping. Up almost $1,600 right now on that gold short. $1,600 right now. Oh yeah, baby. Taiwan, 64, 65. So far, oh, we still haven't taken out these equal lows. From a high time frame, I bet you could play a multi-day short on NQ going into next week from here to here. I might open this in my brokerage account because I can't hold multi-day shorts in prop. Man, S&P is so resilient. S&P is so resilient. Okay, the 10-year yield now is pushing like crazy because of those hot numbers, which means the dollar is going up, which is not good for equities. Yeah, I might buy these VIX calls for May. Let me see if does the VIX trade on Thinkorswim? It's not 24 hours, but I think 6:15 because it settles AM. So I'm looking to buy. So I'm looking to buy maybe the 13.5 calls. Wow, there's so much freaking open interest. Oh my God. The 20 calls on the VIX have 136,000 open interest. The 18 calls have 132,000. 17 have 75,000. Yeah, I might go. For May. Actually, what is April? The 16 calls have 100,000. Yeah, I might go 13 and a half calls expiring in April. And then by next week, potentially roll those. If we don't get a spike in the markets by next week, potentially roll those into May. So I think it's going to be April. I think it's going to be April. We know it. They know it. Market knows, and this time will not be different. Oh, most likely something will break? Yeah, I agree with that. I definitely agree with that. OPEX on Friday doesn't really make a difference. If you know about it, it's priced in. Your nose looks swollen? Okay. Bro, I just woke up like half an hour ago. The fuck? I'm glad you're focusing on what's important. I'd love to see what your account looks like. Focusing on all the important things. I just woke up, bro. I don't know. What you want me to tell you? I could say what I really want to say, but it's too early for that. Me and Prim says, don't be rude. Are you talking to me? Me and Prim? Or are you talking to that person? Oh, yeah. Z's helping people. Okay. I'm glad you're not talking to me. Your nose looks swollen.
Have earnings revisions higher. So you mentioned Savita doing that, but even on a company by company basis, it's managing to to kind of alleviate a little bit of the immediate concerns about, hey, this is a really expensive market.
Meantime, we're watching the biggest loser year to date on the S&P, which is Tesla. Gets another note to the downside today. UBS cuts from 225 to 165. It's the third price target cut we've seen in about a week after Deutsche and, of course, Wells yesterday, which went to 125, one of the lowest on the street. Market cap, David, now below JPM, and it's a worse performer on the S&P year to date than Boeing, than Warner Brothers, than Paramount, than Charter, than Humana.
Man, that's some bad company.
Yeah.
We've talked about it obviously often, as you might expect, and there it is. Yeah, JP Morgan's worth about $551 billion. Tesla's not, sort of about $10 billion or so below that, at least as we begin trading this morning. And again, it was down yesterday on that downgrade from Wells Fargo that we discussed in terms of their belief that the price cuts are going to significantly impact profitability, as you might expect, and they really do question sort of the ability of the company to significantly grow. And there you can see Boeing obviously also along with Tesla in terms of its very poor performance. You know, Mike, people are going to start to say, oh, how much is he levered on and things like that. Yeah. I kind of hear that on Musk. That's, it's not part of this issue at this point, I don't believe, and they'll look at.
Wow, Tesla's taking a beating. Like I said on my last stream, I think 152 is probably the floor, at least in the interim. Do you think we'll be at all-time highs in November during the election? If something doesn't break, yeah. But remember that we've had 3 recessions happen during election years. People forget this. 2000 was an election year. 2008 was an election year. And 2020 was an election year. Man, I should have shorted that. That right there was a perfect short right here. We'll find another one. We should get an indicator what measures rate of negative headlines for Tesla versus Tesla's stock. Doesn't even make sense, bro. Elon for life. Oh my God. Market will either rally or bust after SpaceX launch. SpaceX is not even a public company, bro. What are you talking about? SpaceX is not even a public company. All right, market will sell off today. Yeah. That's what I think. If you go back and look at my analysis on even the free analysis that I posted, I posted this on Twitter last week, I think. Let me see. Right here. I said that we'll trade into here and then trade down to take out these lows. By the way, follow me on Twitter, where I send out free trading and finance content, as well as Instagram all the time. But that is what I think is going to happen is we traded up into here. It took a few days, surprise rally on really terrible CPI. And I think we trade down into here. Now, tomorrow's Friday, so it could be a relief day. And like someone earlier in the chat said, the market could be waiting for FOMC next week. And I agree with that. That could be the case. The market could, just trade in this really ugly range until next week. But my overall thesis is that we get down here. And right now, did we take out London low already? Oh, yeah, we took out London low. That would have been a sick trade right there. We'll find another one. I would have been done for the day. I'm up 1,500 on gold. And if I took another trade, I would have been done for the day for sure. What prop firms you work with? I use Top Step. So we took out London. Asia lows right here. Wait a minute. Yes, Asia lows right here. And this right here. Where are those equal lows that I was talking about? Down here. My target would be 18,076.25. Not necessarily for today, I mean. Oh, if we can come up here, I would take this short on NASDAQ. What time is it? 6:12. If we can come up here, I would take this short on NASDAQ. So this right here is London. No. We have all these equal lows here. If we can come up here, I would take this short on NASDAQ. God damn it. Just took out the lows. No. I wanted it to come up here and then take out these lows, but it just took out the lows. That's not how this works. What are we talking about, Jixar? Sorry, not sure what you're referring to. Is Tesla good for long term if bought at 194? See, you guys are not you guys. A lot of people in my view should be nowhere near the stock market. You should invest in the S&P 500 and sit back and call it a day. Because it's clear, like, when you are buying these companies, you are just throwing money at ticker symbols and you're not looking at anything to do with the company. You should not buy Tesla or any other company if you have no idea whether it's a good value. Like, you know, asking if buying, and I'm just being real with you. Like, I'm not, this is just a conversation, and feel free to push back. But I'm just saying that if you're, you know, when people ask, is this a good buy at this? You should have known that before you bought, because when you're doing your due diligence, you're looking at the company, you want to know if what you're paying is from your perspective and your analysis of the company and what you think the company is going to do in the future. You want to know if that's a good price or not, right? Like when you go to the store and you buy eggs, if it was $12, you might say to yourself, well, eggs are good, but it's not that worth it. Now, if it's in the $4 to $5 range, you might be like, now there's a decision to make, right? Whether it's worth it for me or not. Same thing with a car or a house, but people don't treat stocks like this, unfortunately, because it's so easy to just click buy. So they're looking at the chart and they're just like, I think this is a good price. Did you look at Tesla's cash flows? Did you look at Tesla's balance sheet? Did you look at its growth? Did you look at its margins? Did you look at its business plans for the next 5 years? Or was it just, I like that it's below 200, it's done well before, I'm just going to buy some stocks? You should approach investing even more in a more detailed manner than you would buy eggs or a car or a house, right? So do you think Tesla's a good buy at 194? And if so, why? For me, yes, I think Tesla is a good buy below 200 for the long term. I do think if we're just talking about price and technicals, in the short term, I do think Tesla has a chance to get to 152. But if you don't believe in the company, you shouldn't own the stock. Like, honestly, like, trading is so hard that you should make investing as passive as possible. Right? So people spend their time trying to be like, oh, should I buy SoFi? Should I buy PayPal? Should I buy Tesla? What else should I buy? Oh, I heard that Bitcoin miners were good. Should I buy that? But they're not looking at the fundamentals of any of these things. They're just throwing money at things and hoping that it rallies. When really you should probably just be dollar cost averaging in the S&P 500 and the NASDAQ on corrections, pullbacks, and bear markets. And that's really all most people should be doing. And then focus all your energy on trading. Yes, you can have multiple accounts on Top Step. You can have multiple 150K accounts on Top Step, yes. Well, yeah, we're on YouTube after all. I don't know what that means. Streamer Robbie. Going for that true day open. What is true day open, Dave, the real trader? NASDAQ has a long way down to go. I agree. I agree. 6 p.m. previous day. What? 6 p.m. quarterly theory? Oh, my God. If you're profitable, bro, that's awesome. Use whatever you want. But is it? Are you talking about quarterly theory? What time zone are you talking about 6 p.m.? The market opens in 12 minutes, guys. See, I really want to short this from here. I really want to short this from here. But it is dangerous because we took out these lows and we took out Asia low. So I need to find a justification. So this right here is previous day low. This right here is previous day low, guys. Can we get down here? I think yes. I think we can. But I would love to retest London and this fair value gap. I'll likely take one contract short here. It is it's risky because we already took out two major areas of liquidity, London and Asia. Now, there's no rule book that says if you take out London and Asia that it can't drop further. Why short and not long? Interested to know. No, this is 2-1, Nori. This right here, this is 2-1. Interested to know why you're thinking long. And I'm not just pushing back for the sake of pushing back. Like I want to just get your point of view. Why do you think this is a long versus a short? If you look at the high time frame, right? The high time frame has to inform your bias. My high time frame, this right here, this fair value gap on the 4 hour, I think we're going down here. So that's on the 4 hour, and then on the daily, it's clear to me that we took out this external range, and we're going to come down here into this internal range. So, but interested to know why you would think long here. I would long this if, like, say on the 5 minute, right? Say we get something like this. Yes, then I would long it. But I would need to see a definitive shift of structure to the upside and then a retest of Asia or London. So if it goes like this, break structure, retest Asia, I might long it. Or same thing with London. Otherwise, I don't think it's easy to be long biased here. Just NQ is so strong. Are we looking at the same chart? Are we looking at the same chart? LOL. I don't know, bro. I think this is gonna tank. Yep. I think NQ is way weaker than ES. I don't think it's strong. If you look at NQ on the daily, look at it. It's literally just barcoding. ES is the one that still has that is still stair stepping. NQ is the one that has stalled. It's stalled since the last 2 weeks of February. It's just trading in this range. Oh my God. YM has had one gap, two gap, has had 3 gap ups, and that's not even the RTH chart. That's the regular trading hours. I mean, the extended trading hours. Yeah, I like the short on YM. How did you get London and Asia on your chart? I drew them. We could get a quick pop before a sell-off. Is that just based on what, vibes? It would be dope actually to get a pop on YM. I don't think it's gonna happen, but it would be dope if it came up here and we could essentially take this out at OTE. Yeah, I would definitely be. We've definitely shifted structure on YM. For sure. Right there. Even on the 15-minute. Even on the 15-minute. This might be the one to go with, guys. I don't think the market gods are going to bless us with a nice opportunity up here. But I think YM is definitely a short. Holy moly, RTY fell off a cliff with no entries. Yeah, I agree with you, Dave. I wouldn't think about a long until something changes. I mean, shit, speaking of which, it could set up here. Is MYM the June contract? MYM? No idea what that is, bro. Is this Forex or options? Man, you're 0 for 2. It's futures. Oh, that's micro MYM? I only trade YM. Yes, they're all June contracts. Man, I really want to short this here. Okay, 13-point stop. I'm going to take a crack at a short. It is risky because we took out. I'm going to take a crack at a short here. Maybe I'll do it with one contract. What? I'll do it with one contract. Even though this could be, like, because we took out Asia low, I normally wouldn't short this. Asia low to me is a wait and see. You want to wait and see if the market then shifts structure to the upside. I want to build my stocks portfolio. Oh, I mean, this is a tough time to ask that question, bro. Am I still taking it? Yeah, it's one contract. I know the market opens in 1 minute, and I could get ripped to hell here. For sure. But it's one contract. And I'm up majorly on gold anyway, so I'm willing to take this with one contract. If I get stopped, I get stopped. Ooh, 170. Let's go. If we get below this, I'll move my stop to break even. Okay, I'm going to move it to break even, guys. Stop is at break even. Free trade. 315, 380. I'm out. Quick and dirty, bro. We take that 300 and run with it. Quick and dirty. You made 400 on that trade. 300 to 400 on that trade real quick. $300 to $400 in 2 seconds. I love the setup where it retests London in a major fair value gap. You made 10 euros. How the hell did you do that? Hell yeah. My work is done for the day. Glad to hear it, bro. Glad to hear it. That was the short right there. What chart is that? NASDAQ. Guys, if you made money on that, put a W in the chat. I want to see everyone who made money on that. Put a W in the chat. And thumbs this up. Oh, man, this is going for more. What time frame are you on? 3 minutes. Oh, man, love to see it. I love to see it on YouTube. That's crazy because we usually do this in the Discord. So many goddamn W's. See, I'm making all of you rich for free. That was the entry right there. In tonight's mastermind, I'll go over this trade specifically. I'll go over the gold trade as well. But this has become one of my favorite setups, which is a retest of London in a fair value gap. I didn't used to really pay attention to that. The fact that, you know, a retest of London or 930 open or a retest of Asia. But I see that, you know, over time, I've seen that is, to me, a very strong setup. There's an inversion gap here too, and a retest of Asia. I'm not going to get too greedy, but I'm going to wait for an A-plus setup from here, but I think you could take it from here. But I'm going to wait for an A-plus setup. 3 contracts, approximately 2,500. Hell yeah. He deserves a thumbs up after that. Bro, do you know when I can't even remember when the last time I took an L on YouTube stream. I'll be honest. It was recently. I tried a play on, I can't even remember. But our YouTube stats in general, but our YouTube stats, the public stats for 2024 are impeccable. Can you take a look at SPY? Okay. And now what? What do you want me to do on SPY? I don't know what you want me to do, bro. This is why lazy questions. Ooh, we got out at the right time. How do you feel about Oracle? Man, it gives me a lot of fuzzy feelings inside. What do you mean, how do I feel about it? The company, the products, options, day trades, stock. What do you want me to do on SPY? Make some goddamn money? If you want to make some goddamn money, get off SPY, bro. And get on futures if you want to make some goddamn money. And if you want to make some goddamn money, learn how to make money. I'm literally giving you the blueprint every time I go live. So either come and join us. Oh my God, and the gold trade is up almost 1,700. What a day. And it's only 5 minutes into market open. Yeah. It's only 5 minutes into market open. That means that I likely don't have to work for the rest of the day. I'm not going to give this money back. Are futures ETFs? No. ETFs are like stocks. Futures are futures. I thought that was Forex. Holy D-man. I told you. Again, this is not Forex. What platform do you use for futures? Platform is whatever, man. People think the platform is going to help you. It isn't. Use whatever's available to you. I would likely go with Tradeovate because the margins are low. Or I would go the funded route, like Top Step. That gold fire trade up 1,500 now. Hell yeah. Sasha, people don't get it, bro. People don't get it. People don't get what we do every day. People don't get it, Sasha. My goal is to be as profitable as possible while making you guys as profitable as possible. You know, when people first join us, a lot of times they're like, oh man, there's no options trades. Like, you need to be sending out trades every day. No, fool. You need to maintain profitability every day. You don't need to be sending out trades every day. And we do trade every day, but I'm not trading options every day. Are futures easier with Forex? Holy, I don't know if you're trolling me right now. You first asked if I was trading Forex or options, and I said neither. I'm trading futures. Then you said, I thought this was Forex. And I said, no, this is not Forex. We're trading futures. Now you're asking me, are futures easier with Forex? Oh, easier than Forex? Apologies. Thank you for that correction. you guys are focusing on the wrong things. Like, what is the best platform, or are futures easier than this, or is this easier than that? You have to focus on your technicals first. You have to focus on your strategy first. Like, if you put me in front of a Forex chart, I'll still be able to trade it. I don't like it personally because I don't like to have to focus on so many things. And for me, focusing on mostly NQ, ES, sometimes RTY and gold and oil. That's it. That's really all I focus on. So I don't want to have to, dip into too many things, but it's the underlying chart is read the same way, regardless of if you're trading futures, Forex, equities, etc. The underlying chart is read the same way. So I would say none of them are easy. Trading is insanely difficult. It's the hardest way to make easy money. You know what I mean? So I would focus on figuring out how to chart, what strategy do you want to use, backtest that strategy, see if it's a viable strategy. Can you get at least a 50% win rate with a 2-to-1 risk to reward ratio, etc. But yeah, I mean, the fastest way to learn is obviously, in my view, the fastest way to learn is in a group of other experienced traders, something that I wish I had when I started trading. And learn from people who are way more experienced. To me, that will fast track you. You can obviously go at it alone. You can obviously find all this information for free. People like me will stream for free. But knowing what to learn is what is going to cut off a lot of time from your learning curve. The thing is, if you go on YouTube and you type in, for instance, how to trade, how many videos do you have to watch and then implement those strategies and then realize that what you watched is garbage before you become successful, right? Like, just figuring out what to watch is going to exponentially increase your learning curve. So in my view, people that prove it, like this channel here where I'm trading live in front of you every time I turn the camera on, if you like this way of trading and you like what I do and you like the way that I trade and it's something that you want to do, well, then you have social proof that is probably someone that, you should try to extract more information from. If you don't like it, which is perfectly fine, then find, another source that gels with what you think you can do. That's really all it is, man. I can't tell you how many, I went to school for finance, bro. I can't tell you how much BS, read through, watch, study before I realized what was BS and what wasn't. You know what I mean? And for those of you that want to join, check out that coupon code that's at the top of the chat. We're doing $99 a month forever if you use that coupon code, and it's usually $125. Do you still think IWM will go to all-time high? It's not that I think it will go to, yes, eventually, yes. I think IWM will go to its all-time highs. Yes. This dude's super quiet about Tesla. Oh, it's Har. Literally the most annoying man on the planet. You know why I'm quiet about Tesla so far? Because I'm busy making money, something that you don't know how to do, bro. This guy always tries to short the market, then comes on here and starts crying. And I tell him, don't short the market. I don't know what to tell you, bro. The reason I'm not talking about Tesla is because I'm busy making money. Also, I don't know how many times I can tell you, Har, maybe clean your fucking ears. I don't know how many times I can tell your stupid ass that we're going to 152. And apologies for the rest of you, but this guy literally comes on to troll me every single time. So, dummy, I don't know how many times I could tell you that 152 is a viable target for Tesla. How many more times you want me to say that, bro? Sorry that you bought calls. This guy literally buys calls on Tesla and tries to short the market every single time and loses money, and then complains that trading is a scam and that I'm just gambling. Does it look like I'm gambling? Just kick his ass out? No, bro, it ain't that serious. If he wants to come on and troll me, let him troll me. You know what? And then when it gets to 152, he's probably going to buy puts on Tesla. Kenan, what's going on, bro? Yeah, sell puts. But you know what? He says options are gambling. He won't sell puts. I've told him that many times. Just sell puts on Tesla. Man, we caught the insane trade at market open. Hell yeah. I'm glad to have made you guys money. And also, a word of advice here. Stay out of this chop. I'm not taking any more trades here until market structure breaks to the upside. If it breaks to the upside. So, you know, if we get a break to the upside, then I'll likely look for longs at this point. We'll likely buy VIX calls for April. Those at the money VIX calls I was telling you about. Gold still trucking, hoping that we get a flush here. If we get a flush of this level today, we're going to 5 figures. We're going to 5 figures on that gold trade. But it's being stubborn right now with this fair value gap, so we'll see. I'm going to go to the Discord right now since I made a bunch of money already at market open, and I likely will not take another trade just yet. I'm going to wait for confirmation, and then I'll send it out in the Discord. So for those of you in the Discord, I'll see you in there. For those of you in the mastermind, I'll see you tonight. For those of you that want to join the Discord, literally every time I turn on the camera, I'm making money for you guys. And if you want more of that, come join us. But I will see you guys. For those of you that are on YouTube, I'll see you guys the next YouTube. For those of you in the Discord, I'll see you in the Discord. Peace.